Good evening friends. It has been more than a year since we implemented GST in India. We targeted with a good and simple tax and one nation one tax. So we need to check whether these targets are achieved or not. There are many problems since we implemented GST, like reverse charge section 9(4), then online filing of returns, problems faced during the working of GSTN. To address these kind of problems, friends, Lok Sabha recently passed a bill which is Central Goods and Service Tax Amendment Bill 2018, and integrated, that is IGST, is also amended. So in this particular video, friends, within 15-20 minutes we are going to discuss clause by clause whatever amendments are suggested by this bill and whatever things are passed by the Parliament, Lok Sabha. We'll start with section 2, clause 18. This particular clause, friends, defined business vertical. Business vertical was defined as a distinguishable component of a business which is engaged in the business of supply of goods or services, the risk and rewards of which are different from other business verticals. By this amendment act, the definition of business vertical is omitted. The reference of business vertical was given in section 25 subsection 2, where they were saying that if you are having different business verticals, at your option you can go for different registrations for business vertical. As the definition under 218 is omitted, another change is made in section 25 subsection 2, where they are saying not business vertical, but if you have a different place of business within the same state, then you may be granted different registrations for your different place of businesses, and the rules will be framed accordingly. So first change is to subsection 18, business vertical, omitted. Corresponding change is made in section 25 subsection 2 of CGST Act. Now friends, after 218 another change is made, small change, in section 7. In section 7(1)(d), whatever subsection was there, friends, 7(1)(d), in that they omitted 7(1)(d) and 7(1)(d) is made as 7(1)(a). So 7(1)(d) earlier was saying that whether any transaction will be considered as supply of goods or supply of services, that will be determined according to schedule 2. Now they have renumbered this particular provision because it is different from 7(1), so now they are saying it is 7(1)(a), not a bigger change. Next change, friends, there was a big problem regarding blanket reverse charge. Section 9 subsection 4 of CGST Act said that if you are a registered person and if you receive supply from unregistered person, then the recipient is liable to pay GST under reverse charge. This is called blanket reverse charge. 9(3) was specific reverse charge on some specific transactions, whereas 9(4) was saying any registered person receiving supplies from any unregistered person is required to pay GST under reverse charge. Now friends, 9(4) was very problematic. So earlier they said that within one day, if 5,000 rupees receipts you are making, then 9(4) will not be applicable, you are exempted from that. Then after, friends, from 13th of October 2017, they suspended the implementation of this particular section up to 31st March 18. Then they extended up to 30th of June. Now by this amendment act, friends, they are saying that under section 9(4) specific categories of suppliers will only be covered. That means this will not remain a blanket reverse charge. It will be applicable to specified categories only, whatever will be recommended by GST Council. So a big relaxation is given that 9(4) will no more be there for all the categories of suppliers. It will be only for specified class of suppliers. Thereafter, friends, a big change in section 10, that is a composition scheme. Composition scheme, friends, the government is having a target that majority of the suppliers or more and more suppliers should be covered under composition, so that the compliance burden will be less. Under composition scheme, friends, you are not required to pay under the regular things. Quarterly you can make the payment, and the percentage of tax is also very small, that is 1%, and in case of restaurant service it is 5% if you are opting for composition scheme. Now friends, the section, that is section 10, was saying that if during the preceding financial year your turnover does not exceed the turnover which will be recommended by GST Council, then you are eligible to opt for composition scheme. But the maximum limit of turnover was 1 crore rupees. So GST Council earlier recommended 50 lakhs rupees, then they recommended 75 lakhs rupees, then they made it 1 crore rupees. Now they still want to go to 1.5 crore. Now it was not possible by the recommendation of GST Council because the Act was limiting these things only up to 1 crore rupees. So by this Amendment Act, now they are saying that this limit will be increased to 1.5 crore. In short, now GST Council has power to recommend that if your turnover is not exceeding 1.5 crore rupees in the preceding financial year, you can opt for composition scheme. So these powers are given to GST Council now. Limit increased from 1 crore to 1.5 crores. Another thing was there, friends, if I want to go into composition scheme, but I am also involved in provision of some of the services, then I was not allowed to go into composition scheme. For example, let's say I am having a business of sale of furniture and my turnover is, let's say, 70 lakhs rupees. But along with the sale of furnitures, I am also having some rent from commercial property. I am receiving some rent. In this situation, I cannot go for composition for the furniture business also. That was the problem. So to address this problem, now the amended act says those persons who want to go into composition scheme, they are allowed to go into composition scheme even if they are engaged in the provision of services, provided the services turnover should not exceed 10% of the total turnover within the state or rupees 5 lakh, whichever is higher. So if, let's say, you are in the furniture business, your turnover is 70 lakhs rupees, you are receiving some rent of rupees 3 lakhs, which is 10% of your turnover or 5 lakhs rupees, it is not exceeding that limit, so you can still go for composition scheme. So this is a major change in section 10. Then next, friends, section 12 and 13 small changes are there. They have given the reference of section 31 subsection 1. So they removed that particular reference of 31.1 and 31.2. Now they are saying only 31 and 32. So a small change, nothing more to discuss. After 12 and 13, friends, the changes are in section 16. 16.2b. Section 16.2b, friends, section 16.2, if you remember, this particular section says you can get the input tax credit of the GST paid only if certain conditions are fulfilled. In that they said that you must have received goods or services. Now, friends, if, let's say, supplier has delivered goods on the direction of the recipient to a third party, in this situation they are saying in section 16.2b that it will be deemed that the recipient has received the goods even if physically he has not received the goods. Now the same provision by the Amendment Act is applicable for services also. So if on the direction of one person, supplier of the service supplies service to a third party, it will be deemed that the person who has given the direction has received the services. So they have made both goods and services parallel. So 16.2b, this is the change. Next change is, friends, in section 17 subsection 3. 17 subsection 3 says what is the meaning of exempt supplies. Now if you remember, friends, section 17.1, 17.2, 17.3, these are the sections which restricts the input tax right when you are engaged in supply of taxable as well as exempt supplies. In this situation, you can only avail the input tax credit only on the portion which is going for taxable supplies and not for the exempt supplies. So it was important to define what is the meaning of exempt supplies, and exempt supplies for restricting ITC is defined under section 17 subsection 3, where it was not clarified whether the things which are given in schedule 3, which are neither treated as supply of services nor treated as supply of goods, will be covered under exempt supplies or not. So as a clarification, they have said under section 17 subsection 3 that those transactions or activities which are specified under schedule 3 will not be considered as exempt supplies. It will not be covered within the definition of exempt supplies for restricting the ITC. Now, friends, a major change is made in section 17 subsection 5. 17.5 is about the restriction of input tax rate on some specific transactions. Now, friends, 17 subsection 5 A and B, These two things, friends, they have removed and substituted. Earlier, what was the situation? If a motor vehicle or a conveyance is acquired on these particular things, you cannot take the ITC. You can take the ITC only if these conveyances or motor vehicle are used for further supply of motor vehicles, or for imparting the motor driving skills, or for transportation of passenger, or for transportation of goods. This was the thing, friends. Now the same was applicable for vessels and aircrafts. In the amendment, what they have said? In the amendment, friends, they have removed the word conveyance. So we are having only three things: a motor vehicle, vessel, aircraft. For motor vehicle, friends, they are restricting these things for motor vehicles used for transportation of passengers having seating capacity not more than 13 persons including driver. So meaning of this thing is, if the motor vehicle is used for transportation of passengers which is having seating capacity of more than 13 persons, then this restriction of availment of ITC will not be applicable. So first, motor vehicle used for transportation of passengers only and not having a seating capacity more than 13 people, then you cannot take the ITC. You can take the ITC only if this motor vehicle is used for transportation of passengers, or for further supply of this motor vehicle, or for imparting the motor driving skills. Same kind of things are applicable for vessels and aircraft also. Earlier, friends, there was a huge confusion regarding whether the input tax rate of the GST paid on repairs and maintenance of motor vehicle and conveyances will be available or not. There were different opinions. Now, so if we are purchasing a truck, then truck is for transportation of goods. You can take the ITC on purchase of the GST paid on purchase of the truck. If we are purchasing a motor vehicle which is having a capacity of less than 13 people, then you cannot take the ITC, except in the situation where it is used for transportation of passengers, or for imparting motor driving skills, or for the purpose of further supply of motor vehicles. Now, friends, as far as the GST ITC on the repairs and maintenance is concerned, assume that you are making a repairs and maintenance of a truck, then you are eligible for the ITC of the GST paid on repairs and maintenance of truck. But if you are making repairs and maintenance of a motor vehicle which is having less than 13 persons capacity, and there is no exemption provided A, B and C, that is for the further supply of motor vehicle, or for the purpose of passenger transportation, or for imparting motor driving skill, then you are not eligible for the ITC of that GST. So these are important things we need to understand. They have completely taken away the concept of conveyance. There is only motor vehicle for the purpose of transportation of passengers, not having seating capacity more than 13 persons. Then we are having a vessel and aircraft. Now, friends, after 17.5, the amendment is in section 22. In case of section 22, friends, there are certain specified categories of the states where they were saying that if the aggregate turnover of a person in this particular states are exceeding rupees 10 lakh, then they are required to take compulsory registration. Now they are saying, friends, for this particular states, aggregate turnovers limit is exceeding 20 lakhs rupees. That means 10 lakhs rupees they have extended to 20 lakhs rupees, like Sikkim, Arunachal Pradesh, Meghalaya, this kind of states, friends. So they have made it parallel. 10 lakhs rupees they have increased to 20 lakhs rupees for certain states. Section 24, friends, section 24 was saying that for certain categories of persons, irrespective of their limit of aggregate turnover, they are required to take compulsory registration. In that, there was one particular entry regarding electronic commerce operator. Now they are saying, friends, all the electronic commerce operators are not required to take compulsory registrations. Only those electronic commerce operators who are required to collect tax at source, TCS, under section 52 are required to take compulsory registration irrespective of their turnover. Now, friends, next section is section 29, in which there is a change. In section 29, friends, cancellation of the registration was given, so they relaxed these things, and now they are saying cancellation or suspension. So till the procedure for cancellation of the registration is completed, the proper officer will have the right to suspend the registration. He will not straight away cancel the registration, but it will be kept suspended. After section 29, friends, there is a change in section 34, a much required change. Under section 34, friends, whenever you are issuing debit note or credit note, you are required to give reference number of the invoice against which you are issuing this debit note or credit note. So it was quite possible, friends, I issued 50 invoices, and against those 50 invoices I am raising or I am issuing only one credit note. In this situation, question remained against which particular invoice I am issuing this particular credit note. So now this particular problem is addressed. They are saying you are allowed to issue a single credit note for all the consolidated invoice issued during the financial year. So one more or consolidated for the full year, you are allowed to issue the debit note or credit note. So that particular problem is also gone. After 34, friends, there is a change in section 35. Under section 35, friends, audit is compulsory by a chartered accountant for certain categories of persons whose turnover is exceeding certain limits. Right now it is 2 crore rupees. Now they are saying, friends, government authorities, government departments whose audits are already done by C and AG, they are not required to get their GST audits done by a chartered accountant. So now they are not required to do this kind of procedures of audit by a chartered accountant if their accounts are audited by C and AG. So this is the change in section 35. After 35, friends, bigger changes are in section 39. Section 39 was about the returns, your monthly returns or quarterly returns. Now, friends, they are changing these things. Certain rules will be amended, return filing rules. What they want to do is, in the act they want to make a provision that payment will be done monthly and returns can be filed quarterly. So once the rules are framed according to new section 39, we will be able to understand what exactly they are doing. But it is a relaxation provision that now you can file quarterly returns and payments is required to be done monthly. Interestingly, friends, section 41, then after section 42, section 43, basically section 42 and 43, which was about the matching of the input tax credit. If you remember, friends, from the beginning these particular things are not working properly on GSTN. That means I am first uploading my outward supplies return, then after a person is accepting those particular credits, these things are not properly done. So they have inserted a new section called section 43 capital A, where they want to simplify this ITC matching mechanism. Now they will frame certain rules according to which we will be able to understand how exactly this matching will be done in a simplified manner. So whatever section 37, 38, 39, then after 42, 43, this kind of matching mechanism was there. This particular section 43 capital A will override these sections and it will provide for a new mechanism for credit matching. After friends, section 43A, there is amendment in section 48 where goods and service tax practitioner can do some other work also in addition to filing of returns. He can file your refund claims and all other kind of things can also be done by a goods and service tax practitioner, a small change. An important change is there in section 14(9). Right now what happens, friends? We are aware of the fact that IGST mechanism is only for the purpose of settlement of tax of GST or revenue settlement between center and state. So the moment you are setting off your IGST credit, a settlement will be accordingly done between center and state. That means the credit will be transferred from the destination state to the consuming state by way of utilization of IGST. Right now, according to section 14(9), you cannot take the credit of CGST against SGST and SGST against CGST. The order in which you are required to take the credit is 100% free. That means there is no fixed order in which you are required to take the credit. So it is quite possible that I keep my IGST credit aside and I utilize my CGST, SGST. Because of these things, what will happen if the IGST credit remains unutilized? Then at the end of the quarter, whenever state governments and central government settles their account, at that particular time, because of unutilized IGST credit, the settlement will not be properly done. The settlement can be properly done only to the extent of utilization of IGST credit. So they have made a provision, they inserted a new section, section 49 capital A and section 49 capital B, by which they are saying that if you have IGST credit with you, then first you are required to set off IGST credit only Then after you can set off your CGST and SGST credit. So this is the provision they are making. Second thing, under section 49 only they have said, if you are having an IGST liability, then first against this IGST liability you are required to set off your CGST. And if your CGST is exhausted, only then you can utilize your SGST. SGST or UTGST, whatever you are having, that means for the IGST liability, first set off the central tax. Second thing friends, section 49B says that they will frame rules according to which then order will be prescribed in which this particular set off will be done. So in nutshell friends, the problem was for the purpose of settlement of accounts between the states and center. To avoid these things, what they have done is they are saying first you set off IGST credit, only then you touch CGST and SGST credit. Second thing, for the purpose of making payment of IGST, first center tax should be utilized and then after only SGST or UTGST should be utilized. So these are some of the changes they have made friends. There are also other changes, section 79, 107, then after friends others 140, 143, but these are not major changes, or we are also having limited time. So those particular changes we will deal in our next session friends. Thank you very much.